Hi there, welcome to Kneppy Invest and welcome to Nvidia Saves the Day. It is Thursday, the 23rd of November 2025. Time is currently 3:13 p.m. So 56 minutes left of trading today on a really good day on the ASX. And what I'm going to do in today's video is I'll talk about Nvidia later in the video because it is probably one of the more obvious stocks of the day. Even though it's not on the ASX, one of the reasons we have had a really good day is because of Nvidia, which is really weird to say that not only our market, but markets around the world were really dependent, going up or down by a large amount, were dependent on one company's results. And that company, Nvidia, released their results at 8:20 a.m. Australian Eastern Daylight Saving Time, 7:20 in Brisbane, 5:20 Perth. And you can actually see exactly what time they released the results just by looking at Nasdaq futures. Nvidia's aftermarket trading share price up about 6%. Anyway, so what I'm going to do in today's video, we'll go through the ASX today, have a look at the best and worst performing sectors, indices, companies. Then we'll go through the top 5 stocks of the day. Nvidia has to be number one, just has to be number one. But the other 4 companies, ASX listed companies that are in the top 5, all have had pretty good days as well, including a few property companies. Yes, property companies and a few small caps as well. I thought released pretty good announcements. AGM and then the trading update, the other one. And then after that, we'll go have a look at the chart of the day. One company in particular, and I want to discuss something new I'm doing when it comes to trading. And I did actually take 2 positions in 2 companies towards the end of trading last night, yesterday afternoon. And we'll have a look at how one of those companies have performed today. A little bit of a surprise. In fact, I think it's the best performing company on the ASX. Okay, in fact, I talked about this company yesterday. Okay, so let's get into the ASX today. Now, before we have a look at the best performing sectors indices, I'm going to show you the Nasdaq 1-minute chart, which, funny enough, I got up here right now because I was planning this. Anyway, so Nasdaq futures. Now, the Nasdaq closed at about, this is Brisbane time, so just after 7 a.m. And for a lot of companies over there release their results after market has closed. And Nvidia released their results at 8:20 a.m. Sydney time or Harrington time, 7:20 a.m. Brisbane time. And you can see exactly the minute they release results. 7:20 Brisbane time. Nasdaq futures up 0.54% in 1 minute. 1 minute. So straight away, based off this, if you didn't even look at the results, didn't look at any commentary, anything, you would know that the market liked it. The market liked it. This has been led higher by Nvidia. In aftermarket trading, Nvidia share price, I believe, was up 6%. So the market likes it. And it's really weird because I thought there was a scenario where even if Nvidia beat market expectations, share price might go down because it would have been short of the expectations that they would beat guidance. But they did beat guidance, but even the expectations of the beaten guidance were actually lower than what Nvidia achieved. The other thing I'm talking about when it comes to Nvidia towards the end of the video is the bullish commentary, really bullish commentary. Now, I have seen some people poo-poo that, but Jensen did have some really bullish commentary 3 years ago, just before the share price of Nvidia went on a massive run, and he was absolutely right. So it would have been, when was it? It would have been, yeah, it would have been 2000, so about, yeah, almost 2 years ago. I remember reading the commentary and how he stated that they're seeing a lot of demand, particularly in the data center area. I think it was data centers, and they expect significant growth in the company, and they got that significant growth. So he was spot on. And anyway, so there's still got to be a lot of shorters out there of Nvidia, and I think they are going to be burned, significantly burned. Oh, by the way, that's on not Nvidia, that was Nasdaq futures. Don't know what I'm looking at. Anyway, so I'll talk about Nvidia later in the video, but that's the main reason we're up. We're oversold as well, and it's been across the board this rally, apart from maybe 1 or 2 sectors. I'm assuming maybe energy's down. I wouldn't be surprised to see staples down. So let's have a look. No, staples actually up. Energy is down. Utilities down. Oh, a lot of that is energy companies like APA, Origin. What else? A few New Zealand companies like Meridian and what's the other one? There's Meridian and Mercury. Yeah, so Origin. Oh, I forgot APA Group. Mercury's actually up. Meridian, AGL, of course, and Contact Energy. So a lot of energy companies in utilities. So really, energy has been a bit of a laggard today, maybe the only laggard, but a really good day for IT. Materials, gold's had a spectacular day, up 2.41%. Another good day, for, not even another, a good day for real estate, probably led higher by Charter Hall. I'm going to assume that. A nice little rebound in financials and discretionary had a pretty good day as well. Now, in saying all that, I'm not surprised to see discretionary. There are some bullish signs when it comes to the Australian economy. Uh, and the reason I say that is because what was it? What was I reading today? That I was thinking, geez, Australian economy is doing really well right now. Oh, what was it? Oh, it was actually Charter Hall. Yeah, upgrades earnings guidance on rising investment activity. That's actually a sign that the Australian economy is actually quite good. Rising investment activity. So it was actually Charter Hall. There you go, Charter Hall. I knew I read that for some reason. Okay, so let's go back to the ASX 20 up 1.06%. So let's have a look at the ASX 20. So Woodside's down. There's only one company I know is down. I'm going to say either one or two companies are down and maybe one surprise. I would assume Woodside's definitely down. How many do we see down? Let's have a look. Two down. And what's the other company down? Maybe Woolworths. No, but even Staples had a good day. I have no idea. Let's have a look which two companies are. Oh, CSL, and it's down slightly. Okay, so Woodside down 0.86% and CSL. Oh, Telstra's another one I could have picked. And Transurban, yeah, I always forget about those two companies. A little bit more defensive, and it wouldn't be surprising to see those two companies down. And in fact, Telstra was down for most of the day. Even Transurban was down for a bit. Best performing companies today, no surprise. Gold, Northern Star, Fortescue's had a good day. Goodman Group, Real Estate, and Aristocrat, another good day. And Rio Tinto, Iron Ores had a pretty good day as well. Okay, now let's have a look at the top gainers of the day. And the best performing company on the ASX is a company called Alvo Minerals, which I discussed yesterday. And I'll talk about Alvo Minerals a little bit more when it comes to the chart of the day. It is not the chart of the day, but I did actually buy some Alvo Minerals shares yesterday afternoon just before closing. And I'll talk about why uh, in the chart of the day section. Mount Ridley Mines share price had pulled back significantly for Mount Ridley Mines. And this could have been a nice little buy as well. This is sort of thing I'm looking for now. So and in fact, I'll talk about this at the chart of the day. In fact, I'll have a look at MRD if I don't forget. Talk about what I'm looking for. Okay, let's go back to the top gainers. What else? There's nothing else to discuss here. Sensen, for those who picked Sensen as the 10-cent stock that's going to do the best this week. Main Pharma, something positive came out for Main Pharma, but I'm not going to discuss that because there's a takeover bid or something and I have no interest. Nothing really discussed there. Best performing companies by market cap. A lot of tech companies that have dropped a lot recently are down. We have lithium companies here, Liontown, Core Lithium up again. I'm not going to complain about that. And I might briefly, will I briefly discuss a company called AFT Pharmaceuticals? They did release results today. Now the share price is up almost 10%, but it's on fairly low turnover. And I'm not really sure that deserves my attention, but I can't find anything else to talk about here. I actually did write down something. I wrote down ANE. What is ANE? I have no idea. So let's actually discuss a company called AFT Pharmaceuticals. Okay, so this company did release results. Now, this company is New Zealand based and the shares are highly illiquid. If you have a look at the trade history, we had trading on the 13th and then on the 7th. So there's a large period of time where there's no trading in this company. Now, AFT Pharmaceuticals is profitable and they are growing, but they sell drugs and stuff. And they have one product called Maxigesic or something like that. And I saw an advertisement for this drug on TV just the other day. Now, typically I don't watch TV because I don't watch commercial TV, but my parents still do. So on occasion, I have to watch a few ads, and typically when ads start, I just go away because I go, "Whoa, what are you watching ads for?" I'm like that now. You don't have to watch ads anymore. Anyway, so they have this product, Maxi Gzic. Well, I think that's what it's called. So this is an international company. Maxi Gzic. They do actually mention it somewhere here. I did go through this fairly quickly. Oh, I there was one thing I didn't like. In fact, yeah, Maxi Jesic. Yeah, here it is. I did see an ad for this. All the other products I've never heard of. There's one thing I really didn't like about this. I was going through this really quickly, and yeah, it was this one: growth investment underpinned by ongoing strong cash flow, and they had operating cash flow of 476,000, and they were actually free cash flow negative. And I was like, what are you talking about? Ongoing strong cash flow? There's no cash flow. It's actually negative. In fact, they did get $3 million in financing activities. Now, I did not have a look at their results because maybe, just maybe, there was some reason behind that. So let's have a look at the cash flow for the cash flow statement for what's it called? AFT Pharmaceuticals. Let's have a look at it. And yeah, they're operating cash flow positive 476,000, investing activity, so purchase intangible assets 3.4 million. So they were negative $3 million just in that. And borrowings drawn 6.5 million. So they had to borrow 6.5 millions to increase or keep the cash where it was, looks like. Yeah, so for me, I just found that a little bit misleading. Ongoing strong cash flow. There was not strong cash flow in this particular half year. So that's probably my biggest problem about these results was that little statement, ongoing strong cash flow. In fact, it was the complete opposite. Anyway, so a little, probably being a little bit nitpicky, but I do have problems with that because I do think it's misleading. But if you're fooled by that, maybe you should learn how to read a cash flow statement. Anyway, share price is up 9.59%. But in saying that, if you have a look at the summary of trading today, I would not imagine there's been much trading. In fact, a few trades, maybe 5 trades, 12 trades. And even then, the first trade was unopened. Then we had a trade at 10:04, and there's like 2 hours between trades. And some trades are like 4 shares. Chart wise, you can definitely see the lack of liquidity just by looking at the chart. Yeah, this is a chart of a liquid company. Now, in saying that, the chart now doesn't look half bad. We've seen a little bit of spike in volume during September, October, but for me, this is a little bit too illiquidly traded. And if you have a look at the weekly chart, the liquidity was even worse prior to 2020. It did improve. Share price has pulled back a fair bit. So maybe there is some value in this company. Market cap probably 200, 300 million, I'm assuming. Let's have a look. AFP, 300 million, 310.4 million. Yeah. And says the P ratio is 26.91, so maybe not cheap. Anyway, that's probably all I could find when it came to the best performing companies today. Where is it? Here it is. Let's have a look at the top losers. I do have a company I want to discuss here. Now, Renerve did a couple raising, share price down. And the company I want to talk about here is Tasmea, share price down 11.42%. And that's probably only really the only company I really could just talk about here. If you have a look at the worst performance by market cap, Drone Shield, another bad day, not surprising there. And there was nothing else I really want to discuss. I don't want to discuss Drone Shield anymore. Anyway, so let's have a look at Tasmea. They did a capital raising and an acquisition. And this sort of surprised me because I didn't have a look at this acquisition at all, or the capital raising. And I just assumed the capital raising was done at a significant discount, maybe 450. And then I had a look at the capital raising and it was done at 550. It's like, whoa, wait. Here we go. Purchase price 60.7 million, comprising 50.2 million upfront consideration. So most of the acquisition through cash, 22.7 million cash, 27.5 million in equity via the issuance of 5 million new shares at 550. Yeah. Now, I'm not the biggest fan of this type of company. It's a labor company. So I was like, they just say it's EPS accretive, but they're always going to say that. In fact, I've never seen an acquisition where the management haven't said this is going to be earnings per share accretive, and the majority of cases it's actually not. Anyway, so not my favorite type of company. Leading workforce solutions provider. I just don't like these sort of companies, low margins, that sort of thing. They did mention in the presentation that there's a shortage of workers in this space, so maybe there's a some dollars to earn there. But anyway, share price has pulled back a fair bit. I was wondering, is this a good entry for Tasmea? Because I was looking at this and thinking, is this a pullback to the 100-day moving average? No, yeah, the 100-day moving average. Is this a reaction from the market or is this a trend killer? This could be a trend killer. This is sort of thing I look for in trend killer events. But is this sort of the announcement that typifies a trend killer event? And I'm probably like, no. In fact, I'm more likely to buy than think it's a trend killer event for Tasmea. More likely. Not sure if I'm there just yet. Looks like share price is going up a little bit. Okay, so that's Tasmea, one of the worst performing companies on the ASX today. Okay, onto the top five stocks of the day. Starting off with Peet. Peet, our favorite person, spelt P-E-E-T, nothing to do with Peets of Ireland and Scotland. And I'm pretty sure this is a real estate developer. I never had a look at this company before, but they did release financial year 26 earnings guidance. And this was quite positive, I thought. And then I had a look at the chart. I went, oh, the chart is looking really good as well. So anyway, they just mentioned here, pleased to provide earnings guidance reflecting the company's strong year-to-date operational performance, robust market fundamentals, and disciplined strategic execution. They expect profit to be between 74-78, an increase of 26 to 34% over financial year 25. They talk about macro market conditions looking positive, or there is a positive outlook. Favorable macroeconomic factors. Demand for residential property remains robust. Elevated levels of overseas migration, which I'm not the biggest fan of that. Ongoing constraints in housing supply. Yeah, not well. As a homeowner, very happy about that because that raises house prices and a positive labor market. Interest rate environment continues to be supportive, with first home buyers in particular benefiting from government stimulus measures. So a lot of things that are really negative that should not be in place, but are benefiting this company and probably a lot of other companies like this. Anyway, so a pretty positive announcement from Peet, and the chart looks really good. Their ticker code is PPC, nothing to do with drugs. And the chart, I hadn't, there's nothing to say anything negative about this chart. Share price very close to an all-time, maybe not an all-time high. Let's have a look. Maybe an all-time high. So things are doing really well for Peet. I can't even tell you what they do. Something about real estate. Let's just have a quick look at, maybe they've got a bit of a section here about what they do. They did release a presentation today as well. So I'm assuming developer, maybe that sort of thing, which would make sense. And just take your time, Comsec. Oh, no need to rush. I mean, no need. And let's have a look. Talking about lots and value projects. So a developer, leading Australian developer of quality communities with strong cultural, well, whatever. Anyway, so that's that. Peet. I can't tell you. Oh, Palmview, Queensland. Isn't that up north somewhere? I don't know. I'm just looking for anywhere I know. It looks like Palmview. For some reason, I think Palmview, like near Cairns or Townsville or Sunshine Coast. I think it's just because Palmview. It says Palm. Oh yeah, yeah. Oh yeah, definitely see why that area would be ripe for development. Yeah, so everywhere from say Gympie all the way down to the New South Wales border, just ripe for development over the next 10 to 20 years. Okay, so Pete, chart looks good, a good announcement from the company. And am I going to trade this? Probably not. Share price, by the way, up 6%. Didn't even talk about that. Coming in at number four, we have a very small company called EVZ Ltd. Share price up 6.98% on earnings guidance. So a couple of earning guidance announcements. Now, this company is small company. We're talking about $25 to $30 million market cap. Let me just verify that. I did a tweet, so I know it's 26 million, 28 million. Well, that's with the share price increasing 7%. So this is a small company. They do release Appendix 4Cs, and they have been operating cash flow positive recently. In fact, I would have put EVZ down on my Appendix 4Cs lists. Uh, or maybe I didn't. No, there it is, 28th of October, EVZ. One of the Appendix 4Cs I did like. Some sort of I wouldn't say they're mining services, but sort of infrastructure, mining, construction services, something like that. In fact, they should tell us what they do somewhere here. Buildings product. No, they don't. Anyway, last quarter, so low margins, and you can see that receipts 43.4 million, operating cash flow positive 4.5 million in one quarter. One quarter. Don't forget, this company has a markup of 26 million or 28 million dollars. Now, that doesn't mean they're going to continue. Not a lot of um, capital expenditure. So they were free cash flow positive by $4.1 million in one quarter. Now, if they had that sort of operating cash flow, free cash flow in 1 year on a markup of 28 million, 7 times free cash flow. So there is a chance this company is really cheap. So why haven't I taken position? I have no idea. I have no idea. Anyway, let's have a look at their earnings guidance for the first half. Let's have a look. So it's nice. They're doing well. First half revenue expected to be between 60 and 65 million. EBITDA to be between 3.7 and 4.3 million. A nice increase from last year. So we're talking about EBITDA. They're trading on, if you just double that, which you shouldn't do, analyze that maybe. That company is trading on 3 to 4 times EBITDA. It's not high. The financial performance demonstrates improved profit margins, reflecting the continued benefits of operational improvements implemented across group's business. What do they do? Let's have a look. Provider of technical services in the energy resources and building product sectors, delivering to the energy, mining, infrastructure, and construction. So when I said mining, infrastructure, construction services company, seems to be right. Seems to be right. Now let's have a look at the chart. The chart does intrigue me a little bit. Because we have started to see no, there's two things that really intrigued me about this. Share price started to turn higher, and we have seen a bit of a boom in volume since the 22nd of October. It seems like that day, whatever they released on that day was a good day. The 22nd of October and nothing. They released their pennies 4C on the 28th. It could be just a fund manager coming in, buying some shares. I have no idea, but there was a big volume on that day, the 22nd. Share price didn't rally. Share price did rally on the 28th when they released their pennies 4C up 12.5. And then share price pulled back. That would have been a nice little pullback to buy into. Definitely one on my radar just because valuation. And I do like these sort of companies that seem like they could be cheap and are cash flow positive, profitable, but they are small. They are small. So that's EVZ coming in number 4. Coming in 3, we have a company I never look at, would never look at, Charter Hall, even with the share price up 6.9% on a pretty good upgrade, earnings guidance upgrade. You can see a theme here today. And one of the reasons I like this was just their bullishness on the Australian economy, I suppose. So a 5.5% upgrade in OEPS. What's O mean? Operating earnings per share, I'm assuming. So from 90 to 95 cents per security. Now, the share price is currently 23.69. So you do have to pay up for this company. This company is fairly expensive. So we're talking about 25, 26 times OEPS. The group is, the reason I like this wasn't the upgrade, because you can get an upgrade through many reasons. I like to look at what's causing this upgrade. And the reason I like this upgrade is because of the next paragraph. The group is experiencing heightened investment activity within its property investments and funds management platform, with transaction volumes rising, equity inflows from both existing and new investor customers continue to perform well. So I'm assuming heightened investment activity means we're starting to see a little bit more action in the Australian economy. That's what I got from it. Assuming no material adverse changes in current market conditions, more than likely no. So I just got some positive vibes in regards to the Australian economy reading this particular upgrade from Charter Hall. Now, the chart also looks good, reminds me of Peet, but this has been looking good for a while, and I just think you're probably a little bit too late to the party. Share price has doubled in the last year and a half, and I think if you go back to August last year, that's probably when this company was good value. Now, in saying that, share price had gone into a bit of a long flag sort of setup or pennant, and it's probably broken out of that. So could be a trade, but what upside are you going to get when a company like this is trading at 26 times earnings, 27 times earnings? Not much upgrade unless they keep on increasing guidance. So not for me, but yeah, they're doing fairly well. Charter Hall. Now onto a small cap that I've held in the past, I got rid of, and maybe now is the time to get back in, and that is Laser Bond. This is another one where I was fairly bullish. Share price up 11.22% bullish on what they mentioned, and also bullish on the chart as well. So definitely one to keep an eye on. So they released their AGM address. They've changed CEOs. I didn't know they'd changed CEOs. I didn't know they'd changed CEOs. I can't even say CEOs. Let's have a look. When did they announce this? Leadership transition 22nd of August. I can definitely see why I missed it. New CEO is Rob Freeman. Anyway, let's have a look at why I was a little bit bullish about this and why this company is in my top five. And number two would have been the stock of the day if it wasn't for Nvidia. So a lot of commentary here. So they talk about why Laserbond trying to sell the company, but I don't care about that. I care about trading update. Here we go. Our financial year 26 results to date reflect the strong momentum from the second half with a robust order book extending into calendar 2026. The July to October period delivered revenues of 15.9 and net profit before tax of 2.5 million. While order book remains healthy well into 2026, the Christmas period typically creates operational challenges as we convert orders to revenues, etc., etc. So I do think this is quite bullish, even though there was a little bit of negative vibes in the last paragraph. But it's fairly typical for this time of year for many companies. They do go through a slower period around Christmas time. But I thought this was a pretty good update from Laserbond, and potentially the new CEO is going to do a good job. So the next thing is the chart, and I like this chart as well. I like this chart. Now, the share price found a bit of a flaw between February and July, share price around 36 cents. We saw the share price rally in July, and then share price has been going sideways ever since. I'd like to see a share price get above 58. That'll be a really good breakout for Laserbond, a really good breakout. But getting up to the levels we saw back a year ago, so there might be a little bit of resistance at that level, but I do like this chart for Laserbond. The one thing I like to see is some bigger volume coming in. The real big volume came in about February through to March when the share price really tanked. So a lot of people were getting out, a lot of people were getting in, repositioning. But I'd like to have seen some bigger volume coming through today. But definitely one on my radar, Laserbond, one that I might buy and then hold for the long term instead of just trading it. And finally, Nvidia. Now, what we'll do is we'll go through. Ooh, a couple of people liked my EVZ tweet. I did one tweet today, EVZ. Okay, so I'll just go through. I actually forgot that you have to bookmark, not like. I liked a lot of tweets that I was going to talk about, but I forgot where they went. Now, we have seen, or we did see, a lot of people poo-pooing these results from Nvidia. For instance, Nobody Special says their accounts receivable grew by 5.58 billion quarter on quarter. Apparently, that's a manufactured beat. They're manipulating the numbers. I have never seen this being talked about as something negative. So I think they are. I think they've, well, I wouldn't say the shorters have lost, but they just finding something, trying to find something. And there were quite a few responses going, what the hell are you talking about? Yeah, what the hell are you talking about? Yeah, anyway. Another one was, there was another one here about, oh, inventory. I mustn't have, yeah, I must have liked that one instead of bookmarking it. So there's another one complaining about the inventories, how inventories rose, but apparently, based on the commentary, their inventories shouldn't have rose. It's these are someone even said they're going to be an inquiry into all these manufacturer results from Nvidia. Anyway, there was actually another tweet here, but I won't talk about that because it's not relevant. Oh, now here it is. Nvidia inventory rising. Yeah. So this one's saying this is inventory rising is just normal. What are you talking about? So a lot of people were saying, oh, the inventory has risen. That's terrible. Oh my God, they're manipulating results. It's just weird what shorters will get to or try to find. So anyway, this person just saying inventory rising as growth slows is normally a red flag. Oh, no, he's not. As growth slow, growth is not slowing. Good. Oh. Yeah, 62.49% growth, growth slowing. Yeah, they're just trying to find anything. Anyway, the other thing I just wanted to point out. I was going to talk about this actually no 10 hours ago. Fear and greed, lowest I have ever seen, even lower than the FTX collapse. This is a really good sign that the bottom has been reached, or there's going to be a bit of a bounce when everyone's in extreme fear. Anyway, so some really interesting tweets from shorters of Nvidia saying, all these red flags, but unfortunately, I think these are just people looking for stuff to looking for wrong, bad things that just aren't there. Because a lot of this, what they're talking about, just does not make sense. Actually, in fact, I want to open up this one just to see if there's any negative. Inventory as a percentage of revenue would be a better metric to look at to determine if inventory growth should be concerned. Uh, and I'm pretty sure someone did that. Not him, because he's inventory. Here we go. No, that's it. I'm pretty sure I saw someone actually do this, and there's no red flags when it comes to that. No red flags at all. So it's just weird. I found it really interesting what people who are short something gravitate towards. Now, in saying all that, let's have a look at NVIDIA's results. Uh, Actually, not the results. What I'm going to do is just have a look at how NVIDIA's brilliant result actually increases bubble risk from the AFR. Let's have a look. Now, all you have to do is go to NVIDIA's website. They should, except or they should have an investor site here. Company information, investors, and they'll have events and presentations. And that's not what I wanted. What I wanted was the press release. So what I'm going to do is have a look at press release because it's short. Here we go. This is probably it. Okay, so one of the things I look for are not numbers. So the results were better than expected. In fact, the expectations were the results were going to be better than expected, but even those expectations were below what Nvidia achieved. We are seeing sensational growth for this company, but I do have some things to be concerned about. Okay, so revenue quarter on quarter growth, 22%. That's quarter on quarter, not year on year, not quarter compared to the previous quarter. This is compared to not quarter compared to the previous corresponding period. This is compared to the previous quarter. So this is third quarter compared to the second quarter. Year on year, 62% growth. Increasing margins, quarter on quarter, but not year on year. Income up to $31.9 billion. Now, here's what I'm going to say. So a lot of people to say, well, the valuation of Nvidia is really stretched. Okay, so let's just analyze this. And more than likely, based off their expectations, they will see significant greater profit in the next year. So let's just analyze this. $31 billion in profit. So we're talking about $120 billion in profit. So if you had a $120 billion in profit, what would you pay for a company like this? What PE ratio? So 10 is way too low. 20, based off the growth, yeah. So 30, you'd be happy to pay 30. So 120 billion. So we're talking about times that by 30. We're talking about $3.6 trillion. So what's the markup of Nvidia right now? What is the markup of Nvidia? It's probably about 4 trillion. 4 trillion. So 4.5 trillion. So just based off a P ratio of 30, in fact, it's not even 40. It's between 30 and 40. So I'm still hearing a lot of people saying the valuation of Nvidia is eye-watering high. It's not true based off the growth and where the profits are in. So I think what they're doing is they're looking back a year ago and they're not looking at what this company is doing right now. So Nvidia is not expensive based off the last few quarters. Now, the question becomes, can they continue this moving forward? Now, one of the reasons I'm a little bit wary is a lot of this growth in Nvidia is through data centers. In fact, $51.2 billion of their revenue is in data centers. So 51.2 in data centers. And then we have gaming, 4.3 billion, professional visualization, 760 million, automotive and robotics, 592 million. So a lot of their revenue is because of data centers. And I am concerned about the concentration when it comes to revenue with Nvidia. The other thing I'm concerned about is a concentration with customers. And I'm wondering if there's a tweet about this. There should be a tweet about this. They are highly concentrated when it comes. That's not what I want. They are highly concentrated. Nvidia customers. Let's see if we got something here. Here we go. Wall Street Engine. 61% of their revenue comes from just four customers. So 22% from A, 15% from B, 13% from C. I'd like there to be a little bit less concentration when it comes to the revenue. So there are a few things. Here we go. Here's another one. What was overlooked is that Nvidia's accounts receivable is growing fast. Yeah, of course. It doesn't matter. It doesn't matter. Accounts receivable is real. It's just money that's coming to them. It's just weird that they're saying the accounts receivable is growing at the same rate that revenue. It's just weird. The people are so fixated on this. It's just weird. And I can almost guarantee you they're all shorters. Anyway, let's get away from that. So I have my concerns when it comes to concentration with Nvidia, but the reason you have to be a little bit more bullish is just what Jensen says. And here we go. Blackwell sales are off the charts and cloud GPUs are sold out. Said Jensen. Compute demand keeps accelerating, compounding across training inference, each growing exponentially. We've entered the virtuous cycle of AI. The AI ecosystem is scaling fast with more new foundation models makers, more AI startups across more industries and in more countries. AI is going everywhere, doing everything all at once. So highly bullish there. And you should not discount that because again, if I did not mention this earlier, Jensen was really bullish a few years ago, and that bullishness it was absolutely 100% right. 100% right. So at this point, and what was it? Someone mentioned they are expecting. Oh, no, 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 no. I was trying to think. They had some expectations about 2027. And if they achieve those expectations, this company will be bigger. Anyway, but I forget what it was. Anyway, so that's Nvidia, stock of the day, and save the day. Save the day. Okay, 10 minutes left of normal trading. And let's have a look at the chart of the day. Okay, first of all, Alvo. So yesterday I was just thinking, I've been thinking about this for a while. I see some really good setups for small cap companies like Alvo Minerals, and I think maybe I should trade these, but only small trades. So yesterday I decided there's four companies. I'll put in $1,000 bids. Those four companies were Alvo. I talked about them yesterday. Share price up 54.29% today. Caspian, I talked about this the other day, up 7.69. Not going to be angry about that. And I took $1,000 positions in both of those companies and also to put in positions for 3D Energy, but my buy was not hit. Damn it. I put in at 18 cents and it finished at 18 cents yesterday. So my bid was not hit at close yesterday. And the other one was Zag, Zulika. My buy was not hit with this one either at 4.3 cents. I was just waiting. Someone sell. Anyway, so the reasons I put in 1,000 bids is I'm not that confident, but I've seen this time and time again when sentiment has definitely shifted, and I just don't know how long this sentiment's going to shift for, but massive volume coming in. So this is based off volume and just a bit of a shift in sentiment. And how long will this shift go? So that's Alvo. Caspian, I really like this chart for the longer term. So the volume, I like that the peak in volume on the 17th of November, and the share price pulled back yesterday. So I thought, let's put in a buy for that. Zag, talked about this as well. And the share price popped up the other day. Share price a little bit volatile the last few days, but I thought 4.3 would be really nice. Now, ideally, what I should be doing is watching the charts of these. And when the share price pulls back to say below or just near the 25-day moving average, that could be a good buy. And the other one what's the other one? Oh, 3D Energy. I talked about this one as well. And I like this chart as well. So share price broke out on the 17th of November, and I was just hoping share price could maybe pull back to 16, but I put in a bid at 18 and hasn't pulled back. I like the volume as well. So this is what I'm looking at, volume, really good volume coming in. A nice little breakout, charts looking good. And I've refused to play these or many of these in the past. And I'm thinking, I think I can do fairly well just trading, but not that confident just yet. I need to enrich my confidence. And that is why I've started doing this, because I think there's quite a bit of, I mean, just this one, there's a beautiful, I was following this one at the start of the year and there was a nice breakout there. But anyway, now the chart of the day is going to be, in fact, I've got two here. ATV, Active Port. This one's been in the news a lot recently. They keep releasing announcements. So I'm not sure if this is announcement saturation. I don't like when companies just continue to release announcements. This company has released, was it one, two, three, four price sensitive announcements in the past nine, probably like past 6 or 7 trading days. It's too much. It's too much. It's overload, announcement overload. And I think the market's getting wary of that. That's why the share price is not rallying right now. And you see the share price popping up. So this is a really good case of, this would have been nice buying the pullback. But you can see the run has sort of starting to run out of puff, and definitely see that in the volume. So that's a nice one to chart to, what's the word, to study. But the one I really want to show you, and I was very close to taking position in this company this morning. Very close. I almost put a price in at 15.5 cents. It got down to 15.5. That's DevEx Resources. They appointed a managing director yesterday, Marnie Finlayson. I saw this, but I didn't really pay much attention to it. The market loved it. Share price up 47.8%. Then I had a look at her profile. She's impressive. Rio Tinto, that sort of thing. Anyway, so this is DevEx, and the chart is the other important thing. So really good volume coming in yesterday, and you can just see this increase in volume back in September, down increase, the decrease in volume, and now another pop-up in volume and a beautiful developing chart for DevEx Resources. The share price had been a bit of a funk, then going sideways, and now going the right direction. So this is something I'm going to play a little bit more with, but sort of a low amount of money, $1,000 each initially. And if I become more confident, if I really am successful with this, maybe we'll say. Okay, so that's all I have for today's ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial whatever. That's it for today's video. Have a good day. Bye.